I hope I'm getting through this quick enough so that we have time for questions. So when something shows up here, goods arrive at an inland port, things can happen. We can have examinations. We can have from either U.S. Customs and or partner government agencies. We used to call them other government agencies. But everybody now is kind of linked into Customs ACE system. So flagging items for examination and things like that are something that U.S. Customs is doing all the time. And these customs exams, these can be just document review. They can be a tailgate exam where they just go open up the back of a container, make sure everything looks all right. We can have a BACUS, which is an X-ray exam, or we can have an intensive exam. Now, it's important to note that that exam can happen anywhere in the movement of the goods in the United States. So that exam can happen in LA. Even if I'm customs clearing in Kansas City or Chicago or Dallas, that exam can happen there. It can also happen in my local port of Kansas City, Chicago, Dallas, Omaha, as well, St. Louis. That exam can be flagged by customs agents in any one of those ports. And it can also be flagged by those partner government agencies like the FDA, the USDA, EPA, etc. Okay, because we've got to remember that U.S. Customs is the enforcement arm. They have their own regulations, but they also enforce, I believe it's over 400 regulations from partner government agencies. So if one of those partner government agencies, such as the USDA or FDA, flags something for exam, then U.S. Customs conducts that exam usually with those partner government agencies and reports back. So why I'm telling you that is because us customs brokers, we get access to see who actually flags things for exams. So that's information that you'll see on our track and trace programs. That's information that we'll see that, oh, it was flagged for exam. You know, a knowledgeable importer can ask, well, what kind of exam? USDA, FDA, or just a U.S. Customs exam, and then what type? Is it a BACUS, meaning an X-ray, or is it an intensive exam? Because as you can imagine, an X-ray exam is much quicker than an intensive, where they're going to unload everything and look inside the box, if it's an ocean container or air freight, whatever it might be. So those are the different kinds of exams that can happen here at the ports, and I'm happy to talk more about that through questions and or one-on-one after this event. Things that mitigate exams, CTPAT, Customs Trade Partnership Against Terrorism. That is a voluntary program. Many of you that are on this call today are members of CTPAT. Scarborough is a CTPAT consolidator and customs broker as well. Timely and accurate ISFs. If they're timely and accurate, then you don't have to worry about an exam because of them being late and or not correct. Those are things that help to mitigate the number of exams that are out there. If you're a company that's interested in pursuing CTPAT, let us know. Send me an email. My contact information is on there, and we can let you know what that costs to do for a company like ours to do it, and or give you some instructions if you want to try to do it on your own. That's okay too. But anyways, we're happy to encourage you to also become CTPAT members. At some point, there will be some sort of trusted trader program that Customs tries to roll out, I believe, towards the import community. It's the same as getting your TSA pre-check or like global entry when we travel overseas and we come back. That Customs knows a little bit more about us, and therefore they trust us a little more, and that's really what the CTPAT program is about. There's importer self-assessment, there's different programs out there, broker known importer programs, and we can talk to those, but those are a little more in the weeds than we're trying to do here at the 101 today. So let's talk quickly about the customs entry process and try to finish up on that as it relates to customs entries and customs compliance. You as an importer of record that's on this call today, you have one standard of care, and it's called reasonable care. And reasonable care is usually measured against your peer companies, so it would be measuring yourself against a company of your same size, your same capabilities as someone else. So for example, a small business that's importing 52 entries once a week is not going to be measured with a large company that's importing 100 entries a week, because the skill level and the knowledge level would be different. The number of employees would be different. the complexity of those imports would probably be different as well. So they're going to measure you based on your peers, and that standard is reasonable care. And reasonable care really means that you're going to try to do, to the best of your knowledge and ability, the best that you can. Now, believe it or not, attending trainings like this one and the ones that Scarborough does on a monthly basis actually is one of those mitigating factors towards your reasonable care standard. It means that you're engaging in training from a licensed customs brokers and knowledgeable group as to the laws, regulations, things as it relates to import trade, and then taking that information and making sure that you're doing the best that you can. So by attending a webinar today on Import 101, you're actually helping to meet your standard of reasonable care. Now, there's a lot of things out there that also help. And as part of the MOD Act, when Customs came up with reasonable care as the importer's requirement, they also take on a requirement to make sure that you're informed, and they do this through informed compliance publications. And I've got a link here on the slide. And again, we're going to send these slides out to everybody along with the copy of this presentation when it's done. But these slides have, if you go to this compliance publications and you read through this, it's got really what Customs is looking for from as it relates to these specific things. Now, we put down here the top 5 compliance issues are valuation, classification, quantity, country of origin, and record keeping. So I would certainly recommend that you look at the compliance publications as it relates to those 5 topics, and make sure that your processes and procedures are in line with those. And we're going to talk about 4 of those today, just to kind of give you a little more insight into what those import requirements are from a customs standpoint to meet your reasonable care need. And why do we do it? And the reason is right here. This is why we try to meet the reasonable care standard. It has to do with penalties. Penalties and the differing degrees of culpability. So the degrees of culpability are negligence, gross negligence, or fraud. And here are the related penalties, as you can see on this slide, whether it's revenue loss or non-revenue loss, what the potential penalties are for doing something wrong, for not meeting your reasonable care standards. If we can meet those, that's great. We still might have to pay additional duties and or some mitigated penalties of some sort, but we might not be held to these other higher degrees of culpability. And honestly, Scarborough's got a very good client base that takes this very seriously, because we're so compliance driven that I think our clients appreciate that and help us to meet those needs. So let's talk about first entry documents. We mentioned them earlier: commercial invoice, packing list, bill of lading, certificate of origin. Again, the certificate of origin is really that burden of proof document as it relates to goods. So if it's a NAFTA related, you're going to get a NAFTA certificate of origin that's going to be required, and or any special trade agreements, virtually all require a certificate of origin, some sort of burden of proof, and or manufacturer's affidavit to validate the origin of the goods. We talked about the bill of lading types and what's required there already, so I'm going to kind of move through that quickly. So let's talk quickly about valuation. Okay, there are 5 methods of valuation. The most common is transaction value, and that's what we've got listed here on the screen. And transaction value is really an arm's length price paid or payable plus certain statutory additions. Okay, some of the statutory additions are assists, and that one of those is listed here. An assist is a material, a component, a part, something that is paid for by you, the shipper, or you, the buyer, you, the consignee, to usually a manufacturer or someone overseas to supply goods or materials for your product. Typically, when I'm doing this training out at an importer's location, we'll go in more in depth into all of the different statutory additions, and I can sum them up for you real quick through an acronym. It's called CRAPP, CRAP. It's commissions, royalties, assists, packing, and proceeds. Those are the 5 statutory requirements that you need to look for, but assist is the #1. So an example of an assist is that, say I wanted to buy this plastic case for this phone here, okay? I was gonna buy it from someone overseas. But in order to buy this plastic phone case for my cell phone here, or to have it manufactured, I had to pay $50,000 in tooling. So I had to give him $50,000 up front so that he could create the tooling to make this case. Okay, typically I might have paid that 6 or 8 months in advance before I ever see a case. Okay, so I paid that $50,000 up front, and then my manufacturer starts manufacturing my cases. So when he does that and he's loading, he's creating that commercial invoice. Well, now that commercial invoice is really he's only gonna charge me for the cost of making that good, so his labor and plastic prices and things like that. So maybe it's only $1 to build that case that I just showed you. Okay, so it's $1 for the case. Well, the fact of the matter is that I've already paid that $50,000 for that tooling. I need to also include that $50,000 on the cost of my import, because my cost of goods is not just $1. It's actually $1 plus the cost of tooling. So you can see how an assist could sometimes get missed and not be included on your invoice. And if it's not included on your invoice, then you're undervaluing your product, and thus you're looking at a potential violation. As I go back up here to these 1592, so because you've undervalued your product, and therefore you've not paid an adequate amount of duties. So those types of situations can happen with any of these assists. They can happen with royalties, commissions, proceeds, and packing as well. And we need to make sure that that information gets communicated to the customs broker so that we can handle that appropriately. So if you're buying any molds, you're buying any diagrams, anything like that from overseas and having them sent to your manufacturer, that's a potential risk there. So we would like to talk to you about that. Give us a call. We can help straighten you out and get you back on the right path if that's there. And what that does is determining the value of the product correctly really helps you determine what duty rate what the total amount of duties, because duties are typically on a percentage of value. There are some that are compound duty rates and or are rated based on the amount of product that you're bringing in. But I've got an example here of, say, 3.7%, which is close to the average duty rate out there.
I have a question that just popped through.
Yep.
This person is asking, what about commissions paid on the U.S. side? Should they be added to the import value as well?
That's a good question, and it's one that we're probably going to have a little more info, because there's usually 2 types of commissions. There's a seller's commission, the commission from the seller overseas, and then there's a buyer's commission here in the U.S., and we probably need to get the details more specific to your situation. But if it's your person here selling a good and making a commission off of it, that's irrelevant, because it's after the importation has been purchased. But it's typically an agreement. Commission is typically an agreement that is between the seller overseas and the buyer here. And again, I'd have to get into the nitty-gritty of the actual contract for commission. That would pay him, and say your vendor overseas, the supplier overseas, some sort of commission based on the sale of goods here in the United States. That's usually the type, and some can relate that to royalties as well, based on the number of sold. So I'd have to look at your specific agreements, and if you want after this event to engage us in that conversation, we'd be happy to help you with that.
Yeah, definitely send us over an email, because we don't know who submitted that question. I've got one more question here, Kevin. Can you repeat the CRAP acronym? Can you repeat what everything in it stood for?
Commissions, royalties, assists, packing, and proceeds. Proceeds would be subsequent to sale of a product. Again, that's money going back overseas to the vendor that would need to be declared. So anyways, that's what the acronym stands for. And those are typically the other statutory additions. And I love acronyms because that one will stick with me the rest of my career. It has, and I've been doing this for 20 years, and it's one of my favorite ones to use, because it's price paid or payable and all that other crap. So let's move on to HTS classification of products. And again, this is a 101 course. So honestly, I could spend a half day of training for valuation, tariff classification, record keeping, and country of origin markings. And we're trying to do it here real quickly. And we need to move a little bit faster to get to all your questions, I know.
We have about 20 minutes.
All right, so HTS, the basics for this is that all goods that are imported require a harmonized tariff system number. The harmonized tariff system is universal to a 6-digit level in the 196 countries that subscribe to the harmonized tariff system, okay? In the United States, we add 4 additional ones that are really more specific for census purposes. So we've got a 10-digit harmonized tariff system number. And typically that information is based on what is the product and how is it used, what materials is it made out of, and things like that. And those are all the questions that we ask you every time, because many of you were engaged in product development, looking at products before you're looking to source them in order to determine what the duty rates will be and if there's any other obligations such as anti-dumping duties or countervailing duties and so forth. There are some tools that's out there, and I've included one here on your screen today, and that is the Customs Ruling Online Search System. Acronym is CROSS. If you go there, you can input some of the characteristics of your product, what your product name is, and some additional info, and it'll bring up where Customs has done some rulings, maybe on similar products, to help you identify what the harmonized tariff number is and what the applicable duty rate is for that item as well. So anyways, it's a great tool. This has been developed in my lifetime. We didn't have this when I started doing it, but it's become a great tool for folks to look through rulings and see what Customs is thinking as it relates to specific products. The only thing is that this is mainly on products that have already been imported. What if you're doing something that's brand new? Then what you're looking for is you're looking for something similar to kind of point you in the right direction of the harmonized tariff system and what number yours would be. So I've got a link here to the harmonized tariff system as well. There's really a list of rules that we're required to follow when we go through the classification process, and unfortunately one of those is not looking at cross. We as a customs broker, myself as a customs broker, I follow the general rules of interpretation. I look at the notes of the chapters, the subchapters, the sections, special appendixes, and things like that in the harmonized tariff system itself to come up with that answer. And then typically I utilize cross to cross-reference my answer to make sure it's right. But anyways, there is a specific format for doing it, and that's something that we teach in really a half-day course on how to properly classify your goods. It's something that we give to people that are in research and development, R&D, those kinds of things. And this is what it looks like for, say, a tractor here, is that you've got the first 2 digits, which are the chapter, you've got the next 4, which is the heading, and then you've got the subheading, and then you've got the last 4 numbers for statistical reporting purposes. So anyways, that's in here for you to look at.
Can I ask something really quick? Because this came up the other day. Do HTS classifications expire? Let's say, for example, an importer says, well, this is just what we've been clearing this under for the past 10 years. Is that something that they should look at and review?
I would encourage people to look at their tariff numbers on an annual basis. Typically, the harmonized tariff system will make a couple of changes a year, and they'll issue those in supplements to the tariff. And it might change the last couple digits for reporting purposes, and/or it might not change. But there are times that certain things expire. And specifically, as the miscellaneous trade bill that's usually passed through Congress has usually some provisions for some Chapter 99 tariffs. And those Chapter 99s usually provide maybe some duty-free treatment for some goods over a certain period of time. And when that miscellaneous trade bill expires, so do those tariff rates. For example, I remember doing a big project on batteries years ago, and it was part of the miscellaneous trade bill. Then it was only valid for certain dates. But anyways, during those dates, they got to bring in goods at a reduced duty and/or a free duty using a Chapter 99 tariff number, which was included in that miscellaneous trade bill. And typically, that's something that gets a lot of heat in our legislators. But anyways, it's possible. I would relook at it every year just to make sure it's the right one.
So to ensure that we're staying compliant as an importer, we need to review our HTS classification and HTS numbers we are using.
Yes,
okay.
Absolutely.
Thank you.
So again, here's kind of a review. These are the things that we as a customs broker ask descriptive terms, physical qualities, materials, composition. This is great because the adage here of garbage in, garbage out applies all the time. I'll give you one example real quick, a seal. If I said, okay, I'm importing seals, Kim, what would you think of?
You're importing seals?
Would you think I'm bringing in a live animal, and not live animal? Or a rubber seal, or a plastic seal that goes in as a component part of manufacturing? Again, that's a great example because you've either got a live animal or you've got a plastic or a rubber part for the most part. So you've got to have really good descriptive information when you're importing. That information should be in your ERPs, and it should be on your purchase orders, and it should be on your commercial invoices. Because if not, that's all something that could actually flag a customs inspector for an examination, is by looking at your documents and then not being details. Your invoices just have numbers on them, like your item number, your SKU, without descriptions. That's not really good for customs either. So our idea is let's give as much information as detailed as possible so that we can prevent any examinations. Record keeping real quick. Record keeping requirement is 5 years. Right now, from the date of entry or the last date of activity for your shipment. So if it's anti-dumping or countervailing, it might be longer than that, but typically it's 5 years. I would keep my records, and that's all records from the issuance of purchase order through the payment of goods. So make sure that you have multiple departments involved in your record keeping process. So that's accounting, that's receiving. We want to know exactly the correct quantity that's received. All of those get saved somewhere in a manner that you can recall them if customs asks you for 5 years. Okay. Now we as customs brokers, we image all of your documents, and you can log in and you can have access to those, but we don't have your payment records. We don't have your receiving reports. Those kinds of things that you also need to make sure that you maintain for a 5-year period to validate exactly what was coming in. And then we recommend at the end of that 5-year period that you destroy those. Because if customs comes in to do an audit of your company and you've got 7 years of records, they're going to get access to 7 years of records. Okay, let's just stick to the statutory requirement of 5 years. Okay, and that includes even copies of the power of attorney that you've issued to me or the customs broker you're using. There is a slight change with ACE record keeping, in meaning that ACE is going to be the main portal of record for maintaining all the documents, and some of the documents or the forms that we're accustomed to in the past, such as the 3461 and 7501 that are listed on this page. Some of those forms, they're actually going away with ACE and their record keeping requirements. So just want to make sure you're up to date with that. Can
you quickly touch on the difference between the 3461 and the 7501? Sure.
The 3461 is what's called the immediate release document. And what that means is that that's what you've got to have the initial customs clearance. Okay, that's your 3461. A broker like us, we transmit both documents, both forms at the same time to customs, but it just has fewer data elements. But if say there's something complex with your shipments, you could do a 3461. I'll give you a great example. I used to handle a lot of air freight inbound from Mexico years ago, back when Ford was building their Escape, and those kinds of things, those radios would come in, and I would just do a 3461 to customs in the middle of the night, and then the next day I would come, and then I've got 10 days to do the 7501 and pay my duties. So the 3461 is first, and then the 7501 is after that. Okay, so and it's got all of the details as it relates to full duties and taxes and things like that you actually have to pay. So it's just 2 forms, but again, both of those forms technically are going away, and you would be able to view them in your ACE reports. And we're giving us a workshop on ACE in Omaha tomorrow as well. Next, country of origin. How are we doing on time?
I think that if we need to run a little bit over, we can, okay, because it's going to be recorded and we'll send it out to you guys. That way we get to you guys' questions. Okay. Country of origin markings. Every product coming into the United States must be marked with a country of origin that is legible, indelible, permanent, conspicuous, and in English, so that the ultimate purchaser in the United States knows
the origin of the goods. The reason is that supposedly we care what the origin is when we're buying a product. That we care if it's made in the USA, if it's made in Germany, made in China, made in Taiwan, and so forth. So the first thing we have to do as it relates to origin and origin markings is, one, determine who's the ultimate purchaser. Because if the ultimate purchaser is a manufacturing company, then they have to, and they're going to manufacture that good into something else, then the good might only need to be required on the outside of the box. If it's going to be an in component that's to someone buying it off the shelf like me, then that country of origin has to be on the product at that level. So we have to determine who the ultimate purchaser is and what they're going to be doing with it before we can determine exactly how it's to be marked. But in general, it must be marked so that it's all of those products or all of those requirements are made. And we do a lot of analysis on that too. So if we have to come look at products to determine if they're marked correctly, we can do customs rulings and request that as well. So lastly, we're getting to the end here, and goods are picked up from the rail, they're getting picked up from the truck, whatever it means. They've cleared customs. They can't typically be delivered until they've cleared customs. They can't be distributed until they've cleared FDA or partner government agencies as well. The original bill of lading was tendered on the goods to the steamship lines, and so forth, and then they get sent to the end destination. So let's go through any other questions that you have, but that's kind of a quick run through of the 101. Again, the compliance areas you need to be worried about are evaluation, record keeping, quantity, classification, and country of origin markings. Those are the big five, and we covered 4 of those today. We didn't cover quantity, because quantity is really your receiving report. Did you receive the exact number that was on the packing list and invoice? If you didn't, do you have processes and procedures in place to notify the customs broker of what was actually received and reported to customs, and make sure that gets corrected? Because if you receive too many of a product, then you owe additional duties. If you receive less of a product, then you want to pay less duties. So anyways, quantity is again, that's one where customs comes in and just matches documents reported to your receiving reports. Make sure that you've actually received exactly the right amount. So that one's pretty easy to speak about.
Okay, so as I mentioned, we will be sending out a copy of this presentation. We have either the full training that we send out, a link to that, and we also have this split up by question and answers that we put out on our YouTube page. I highly recommend you guys subscribe to our YouTube page. We've got a lot of training out there. You guys are welcome to it. It's free, and it's out there in the public. So share it with all your people. One question that just came through: can we assist shippers or importers with determining HTS codes?
Yes, we do it all day long. And again, that's an intense process where we're going to look at products. We're going to look at marketing of products to see how it's being distributed. And the reason I say marketing is because there's a lot of use provisions. I live here in the Midwest, and we have a lot of agricultural equipment, a lot of ag products. And agricultural typically has some additional tariff numbers that allow things to come in maybe cheaper or free of duty because of the nature of the product. And so we always want to look at the exact product, what it's made out of, how it's being used, how is it being marketed for use, in order to come up with that HTS number for you. But it can be a very time-consuming process. We're also going to look at customs rulings and things like that. But that is a service that we provide.
Awesome. Another question that came across is if we can get into the Incoterms some more. And I know that Kevin mentioned that there can be an entire half-day training on Incoterms. We actually do have a link out there on our YouTube channel for Incoterms training that you can go and check out. You'll get a link to that with the follow-up email. If you have specific questions or you want us to help guide you on which Incoterms to buy on or sell on for that matter, definitely contact us directly. We can help you with that. Another question in here, a good one is, can a supplier change importing terms prior to a new shipment without the wholesaler's permission or knowledge?
You know, there's nothing in customs regulations that's really the contractual obligation between you, the buyer, and your seller overseas, and there's nothing regulated on the custom side of things that can prevent that and or that allows that. So it's really outside of the purview of customs in general. I wouldn't think that you would want them to. Again, my recommendation is you as a buyer take control of the Incoterms, buy on an F term. If it's ocean, buy FOB. But use that F term, even that E term, X works. X works is a good term to use, especially on the import side. The only thing with X works is that it requires that you pay for any export formalities in the country. Now that's not bad in Europe because they don't have those types of that many conflicting terms, and X works is very common, meaning I'm going to pay for the truck to pick it up at their dock, deliver it to the port, and ship it out. Very common in Europe, but that can be really complex in some countries, and in some Latin American countries it can be very complex in Asia as well, because the cost to get, because they require export declarations and export customs clearance, and means you're subject to paying those fees, and sometimes that inland fee in Asia can be really expensive if that manufacturer or supplier is say way inland or up a river or whatever it might be. So that's why we recommend letting them handle what's on their side at an FOB. Let them take care of paying for and scheduling the shipment and paying for their charges at the origin location, and you take it from there. That's why we recommend the F term, but E is not bad. Just have to be very, very particular with what country we pick from. The reason I don't like C terms as it relates to Incoterms is because we're using their freight forwarder, and you as the importer who's responsible for the security filing might not know the shipment is being sent because you don't have great communication with their freight forwarder, especially if that's out of Asia where they change freight forwarders very, very often in order to maximize their return and for profit on the freight piece. So anyways, that's why I don't recommend C terms, is you lose control, you lose visibility, and then you're at risk of a potential violation for the import security filing not being on time.
Very perfect. In regards to the HTS tariff code again, can that be a different code from the exporting country and the United States?
Yes. And the United States, and I've talked to customs inspectors, my office years ago used to be right next to customs inspectors, and he would say, we don't care what they think the tariff number is in the foreign country. And we see that a lot in Asia. And honestly, some countries have ruling systems, and their opinions on from one country to the next vary. So I'll give you an example. I had a client that had a binding ruling in the United States for a particular product. Canada had a binding ruling for the same product, and they were in completely different areas. One was a power supply, one was a battery. And again, two customs rulings, two different HTS numbers. And that's very common. In Asia, they like to pick the tariff number that gets them the maximum rebate. That doesn't mean it's right here. So my advice to you is don't listen to them on their tariff number. You do your due diligence and you make sure it's right. Because when we declare or make a declaration to U.S. Customs here in the United States, we want to make sure that that tariff number is absolutely 100% correct for you. You want to make sure it's correct for you. It has zero effect on the shipper overseas. So if it comes in with the wrong one, you know, tell them not to include it, but make sure your broker declares that correct HTS number based on the product here in the U.S. and you're protected.
Okay, let's go back to the 7501. You had mentioned matching up what was received to what shows on the commercial invoice, but sometimes we see shipments, ocean shipments, come in much after the 7501 entry date, meaning post-entry is required to correct the 7501 if quantities are incorrect. Is this okay?
It is okay, and one of the things though that we have to think about when it comes to post-summary corrections, and that again, if the receiving report doesn't match what's on the 7501, then you need to make a post-summary correction. ACE has made that easier, but we also need to look at the de minimis rules and see if it does need to, how it needs to be reported based on the change in duties. Usually there's a $20 change there. So we would want to look at the de minimis to see how we would handle it specifically. But you would definitely want to keep that record and make sure that you communicate well with your customs broker any changes between the documents and what was actually received. Put in good processes and make sure that communication flows between the person receiving it and the person communicating with the customs broker if they're different.
Well, I think we've got one more question that's live out here. Some other people have submitted questions prior to registering for the webinar. We will get back to you guys directly. This one last question that's out here is, are there minimum invoice requirements that are required for U.S. Customs?
There are specific invoice requirements that are required on every single customs entry. And I can send you what that list is, and that list is actually in 19 CFR, the customs regulations. It has what the specific invoice requirements are. Now, you have to be mindful that some of those requirements might relate to specific government agencies and things like that that might not be specific to your product. But there are specific customs requirements that are out there. There's a list. I can't remember how many is on it, but I do have that list, and I'm happy to send that to you, and we can post that out there with this presentation on our website as well.
Okay, I lied. Let's just do one more question.
Stop lying.
Okay. If our supplier sends us items at no charge, can they be listed on the commercial invoice and clear customs at $0, or does every item need to have a value?
The answer is no, they cannot have a zero value. Every product that you would want to import has a value. It has a value for insurance purposes. Maybe you didn't pay for it. And again, when we're looking at this, we're looking at what is, we're looking at those different degrees of, or those 5 different elements of valuation. The number one is transaction value, and we talked about that one today. So when you're not having a transaction where you've paid for a product and they're giving you a product for a small fee or for free in this instance, then we go down to the next level, and that one is value of identical merchandise. Transaction value of identical merchandise. So in that situation where we can't value the product because you didn't pay for it, you don't have the unit price, we would look at what is the cost of that product that you didn't pay for. And we see that a lot. Say you bought a bunch of these cups, and you bought 100 of them at $10 a piece, and then because you bought 100 of them at $10 a piece, they give you 10 of them for free. I know that I would just utilize the value, the price of one of these products that you purchased, because that's an identical product that you did have a transaction value with. So that's the price that would need to be declared, because it does have value. It has value for insurance purposes, and it has value for customs purposes. It will never be free. Nobody ships anything for, I mean, provides that has no value whatsoever. So anyways, that's the value we would utilize. That can become very, very difficult. But again, we look at we look at each of the different ways to value a product in order to determine the right one. So we've got identical merchandise, we've got transaction value of similar merchandise, we've got computed value, now I'm losing it here, but so anyways, that we would find a way to come up with the correct value. But you can bring it in. It can show free of charge, meaning you didn't pay for it, and that's good for accounting purposes. And if customs comes to audit you for valuation, you can say, no, this is what I pay. I received these for free, but I did declare the correct value to customs in order for duty payment purposes. So that would come through.
Okay.
I hope that helps.
We do have a couple other questions in regards to, let's say, duty drawback, for example. We have a whole nother training on that. So your duty drawback questions, definitely send us an email and we can help you through that. Anybody that's out there asking about our processes for best practice or auditing, definitely talk to us. Like I said, we're very known for our trade compliance consulting. That's something that we can talk to you about, something we do every day. Newer regulations that are out there, those are just different news items that we continually post out on our newsletter as well as our blog. So check out our website in regards to those. And definitely contact us with any questions that you guys have. We're here to offer up our information. So Thanks, and keep coming to our webinars.
Yeah.
We appreciate it.
Thank you for your questions today. Thank you.